Hi and welcome to today's presentation with Flexion Mobile. Today we have the CFO Niklas Koresaar with us presenting. My name is Martin Westerlund and I'm from Finwire. If you have any questions for Niklas, please use the form that is located to the right. And with that said, please go ahead, Niklas.
Thanks a lot, Martin. Yeah, so I'm CFO in Flexion Mobile, and I'm doing our Q2 earnings report. There's a lot to go through this quarter, so I'm gonna push ahead quite quickly here. First of all, just a recap of where we're on the earnings guidance. Last year we had 40-60%, so average 50% growth. We ended up with 46. For this year we guided again on 50% on average. And in Q1, we had a 61% growth, and then we saw really strong performance in April and in May. So we had to increase the guidance to an average 70. And now, of course, we come up with, for distribution, which is kind of old Flexion, I think it's fair to say a really strong performance where we're averaging for the quarter compared to last quarter, 100% growth, and we're at 81% growth year to date. So at the upper end, or actually above our range of guidance for the year. A quick introduction to Flexion to new listeners. So in distribution, existing listeners, your people that follow us for some time have seen in the past is that game developers within mobile, they use two channels to reach out to game developers, which are Apple and Google. And Flexion has kind of cornered the market for the alternative stores. These other stores, they're struggling to reach out to themselves. So there are stores like, it's really big stores. It's like Amazon, Samsung, One Store, Huawei. And so we become the third distribution pipe for game developers. And what's really cool now, of course, is that we have increased our service offering, where we're also offering marketing services within influencer marketing and coming more into this. But it's also that we actually as a group have moved outside mobile. Mobile is still the heart of Flexion at the moment, but both of these audience and Lightup are of course working with developers on selling PC and console for PC and console. So we are slowly and steadily moving out of mobile, and that's something that is over time is very interesting for us. This is really what Flexion is about, and that is that we have entered a niche market, which is alternative distribution market. And we got in a niche market and we capture that market. And I can't say we own the market, but there's no one else really doing it. And that means that, we're the first mover on that market. We were doing this, Nokia Ericsson. We create for every day now higher barriers of entry. It's very hard for someone to break in. And the portfolio of games we have is, you talk about content is king, and we are for sure the king on our market. It genuinely is a world-leading quality on our game portfolio. The tech we're using is also, we have access to the games we work with, so we can follow new trends on the market and also justify investments because we're working with a large portfolio of games, which developer doesn't do. So we can really build for the future. And now, of course, also our marketing service. So the takeout from this is we cornered a niche market, and from there on we can grow, strengthen that and grow beyond that. That's very much Flexion. If we look at the quarterly what we've done in this quarter, it's very much been about integrating Audiensely into the group. And that is to realize what we saw and see are very strong sales side synergies within the company. So the portfolios of clients and potential clients really match each other really well. So it's about cross-selling between the two, and we're already now Audiensely are pitching distribution to their clients, and we are offering influencer marketing to our clients, and we already started to be active live on campaigns between the two. That again is something that is probably going to drive in terms of revenue more 23 and beyond. but that we managed to kickstart this early is very, very good. Then we are obviously been driving a lot of users to our new games, the ones we signed last year, hence a lot of the growth. And the KPIs are better and better for distribution, which means that it's easier and easier to sign new really big games. We're executing on in-house, on performance marketing, user acquisition. It takes time, it's early, but we are moving ahead on that. And of course, it's been gone in a lot of hard work to set up a group structure around Flexion. That is a big process. I can for sure say that. But that's where I've had a steering group, been very active with it, and that actually we consider that done. So the initial phase had actually been said in the company has been completed now. If we look at Audiensely, the company we acquired it completed in April this year, and it's a 10 million purchase price and up to 10 million earnout. Audiensely, as a recap, is one of the leading influencer agencies within gaming worldwide, and they work on kind of the high-end market. So their primary they do all channels, but the primary channel is YouTube, where you have very big influencers with very steady and that kind of, you can call it valuable follower bases, which they can charge on. They're German-based in Düsseldorf, is 30 staff, and they're growing staff. They've been quite successful now in recruiting in people. The focus for the year has very much been to work to integrate with Flexion, to realize sales synergies. And what's very cool here, and also a long-term effect, is that we're now pitching both Flexion and Audiensely are now pitching the group services to the client base. So we're a bit different now when we're pitching compared to others, and we can offer something else. And that's over time, especially if you can, as a group, add more services, that can be quite interesting. In terms of the revenue cycle for the company, it's that it works quite differently from Flexion, whereas at the beginning of the year, you talk to your clients and secure a yearly budget. Kind of quite loosely, it's not a contractual budget, but how much you're going to spend, and then you set up your structure and your campaigns and the strategies in Q1 and Q2. Maybe also hire more junior staff if you're growing a lot, and then it's about executing those strategies in Q3 and especially Q4. And that is also a time when the demand for influencer marketing is massively increasing, so the margins goes up, the pricing and the margins goes up a lot in this. So second half is very important in this industry, and especially Q4. Because after COVID, the market is opening up and there's a lot of new sales activities. Audiensely grew over the quarter to 2.4 million euros, and it's a performance year to date of 80%, so they're growing a lot. Gross profit up 50% to 0.7 million euros, and EBITDA is up 30% to 0.3. The reason why EBITDA is down is that the market, especially Q1 was relatively strong for Audiensely, and they finalized some of the Q2 projects already in Q1 at the same time as they've been hiring for the Q3, Q4. So the EBITDA was relatively low in this quarter for the company. If we go to Lightup, so this is this little company Flexion invested 500K for 20% of the company with an option to double the investment. And then we have an option to buy the company for an EBITDA multiple later on. But at the moment, we consider this to be an investment in the company. It's early stage ad tech. And if you think about Audiensely, focus on the high end, which is YouTube-based influencer with very steady, strong followers. What Lightup was solving is another part of the market. And that would, for example, if I would go out and want to do a bit of influencer on the side because I have some great idea, I don't, so don't worry. But it's very hard for me to work in YouTube because I wouldn't be able to build up that user base that you can monetize. Because I'm not active enough, I'm not good enough. But on TikTok, because it's instant success and you don't have to succeed on every campaign, I can be active there as long as you have the right tools. So if I manage to do the right campaign or the right video, there is what Lightup has sold is a very scalable marketplace where I get paid for based on the performance. So if I manage to get someone to download a game, I get paid for that one. So it's an automated process, whereas Audiensely was more on a flat fee agency-based pricing model, and it's also very scalable, measurable as a platform. That company is Hamburg-based. They went for rollout in January. They're now 7 headcounts. We're supporting them a lot. They're actively hiring. In terms of where they are, they can get the campaigns from developers. So demand is ahead of the curve, and tech is also the rest. For them, it's nice to fill up with influencers to start using this. And here we did a press release earlier this week on TikTok, and here we're working, Lightup, Audiensely, and us working together to now push Audiensely's influencers into this, start to use that. And that, of course, is a great boost for a new start, for a new company, because you can set the whole ecosystem moving. And they are generating some pretty impressive campaigns for such early companies. So they have campaigns on plus $10K in revenues, and they do generate very strong KPIs in there. So yeah, they are growing the revenue base in the company, and they kind of control burn rate in that company, which is something we at Flexion like. If you go by group revenues, yeah, we have a guidance here of 100%. We came up with 130% growth this quarter, very, very strong growth. And year to date, we're at 97%. That year to date number is, of course, 1 quarter without Audiensely and 1 quarter with. So it's mathematically, when we are moving into Q3 and Q4, you have more quarters with the actual performance, with the Audiensely numbers in there. So the year-to-date number may go up. So we go to the next one. Sorry. If you look at the game portfolio, we added two big games, but not too much have happened on the portfolio this quarter. We had 1 big game coming in, Avalon. But this slide is I'm really proud of, to be honest. And that is that we had 2 big games coming into what we call the top tier games here. And what we're measuring here is games that have been live for more than 6 months to take away the initial ramp up. And that, with any logic, adding 2 really big games should actually reduce the average earning of the games. But what we're seeing here is that we actually increase the average earning of these programs. So that is, on average, we now have 7 games with an average earning of $790,000 per month. So we can now go out to the developers, say that give us an average big game in all your channels, and we should generate you $10 million per year in revenue. And these are numbers that even the biggest developers are listening to, and hence why we are so successful in signing more and more games. I'm really, really proud of this slide. If you look at the gross profit, it definitely is grown by over 200% on a group level. Cost base are up to 1.5, so we have about double growth in gross profit compared to the cost base. But what's even more impressive is this one, I really like this, is that on distribution, you're 3x on revenues, also gross profit. But if you look on the cost base here, is the cost base gone up by, if you take away FX and amortization, so it's an EBITDA equivalent cost base, it's gone up by 50% over 8 quarters. And of that 50%, 15 of that is headcounts that are working on new strategies. So it's almost flat cost base when you can, at the same time as you can grow your gross profit in the company. And if you think about it here again, we have 7 games now generating now 90% of our revenue, and 7 out of 25. So what we can do to keep costs down is to don't grow the total portfolio at all, just replace games that are underperforming with new games, and then you can keep the cost base more or less flat. So very low marginal cost in distribution in the company. And then let's see one. And then we look at we look at a couple of effects that have happened. There is one slide actually missing. I want to mention that is that our EBITDA has grown from being negative to flat, and we had 2 or 3 quarters at about half a million pound, and now it's gone up to 1.4 million pounds. So EBITDA in the company is growing quite a lot in the company. And those numbers have been adjusted for FX. We've taken out FX from our EBITDA for definition, because we see a lot of FX effects going forward, which I'm coming back to. We have, because we are IFRS compliant, or we follow IFRS for accounting, we do see quite large effects below EBITDA in the company, and this is something I would like to go through. And first of all, we have done a valuation which has to do with, as a company, when you acquire someone, to assess the purchase price from a bookkeeping point of view, and also the assets you have acquired. And here we appointed one of the leading accountancy firms in the world, and their corporate finance team has gone through this with us. It's what you call an independent valuation. And what they come up with is that we have a contingent consideration liability of 6.6 million pounds, and that is coming up in the balance sheet, and that is the GDP equivalent amount of the NPV adjusted earnout. It's starting to be complicated. So it's the earnout NPV back into GDP. And we mentioned that the book value in euros before NPV is 10.4, and if you know Flexion's number, the maximum earnout is 10.7. So we consider it likely through this valuation that we're going to pay more or less the full earnout to this company. And if you think about it, in an SPA, when you acquire a company, you don't really price in synergies for sales. And what we're doing is to help them drive the revenues in the company. And there are 3 intangible assets identified. Is 4 million pounds of existing customer relationships, which is going to be amortized over 10 years, which you're definitely going to see in our P&L as amortization, 5 million in brand value, and 7 million in goodwill, which are not amortized over the year. If you look down on these items below EBITDA, is what we're seeing is we start to see a finance charge, and we have 0.3 million pounds in this year, and that is when you take the net present value back to its book value when time lapses, when you come closer to the payout. That difference, which is discounted at 16% project IRR according to valuation, that goes as a finance charge. So we don't have any loans here that would pay 16% interest. It's very much driven by IFRS. We saw quite big FX adjustments during the quarter, and is 0.9, almost £1 million. And we said in there that it's one of the key reasons are accruals, and that is the timing difference when we receive money and we book revenues and costs in the company. We have a mixture of 90 currencies, local currency, and 3 settlement currencies. There is a big basket of them, and because we're covering the whole world, it's kind of over time they kind of average itself out. And we saw, for example, last quarter we had a quite positive effect of, I think, £200,000, and this already in July we mentioned we'll recover another 250. So we just bit of bad timing that all the negative side happened in this quarter. Other ones is cash adjustments, and there is a corporate acquisition FX adjustments in here already. I just want to note that the earnout is payable in euros, and we can easily match that because of that mix of settlement carriers. We have a lot of inflow in euros, but if the euro to sterling start moving, we may see quite large positive or negative FX effects. And that's why this is one of the key reasons why we took it out of EBITDA. Then we have amortization of game distribution right. This relates to this multi-game deal we signed in September 21. and they are kicking in. They are now kicking in as the two large games have been rolled into the project. So that's coming. Is also amortization, and finally we had a bit of transaction costs, advisory fees to legals and financial due diligence, etc. on the audit transaction. So those are one-off effects we also seen there below. So it's more and more. I think that's it's not just us. Anyone following IFRS going to be the more active you are, especially in M&A, the more complicated everything below EBITDA will become in a company, especially if you're growing a lot. Here it is. For some reason this has been moved to the wrong place, but here is what I described is that the EBITDA in the company is shooting off to 1.4 million, and 200,000 of that is from Audiously. And finally, if we look at this is a slide I normally finish off with, is where we are as a company, where we want to grow. So the green is the distribution, the existing one. It's a very simple strategy. You add distribution to existing games to grow them from 500, 700, 800 and beyond. And there you can work more and more with stuff like audience to grow your revenue existing games. You add more games, clearly, and add more channels. So you get very large growth, more and more diversification. We had 5 large games averaging the top earning games. We have now 7, so that's 40% more, and you have a very low marginal cost. So that creates a kind of that stability in the company, stable, diversified, profitable, and then we can start looking at monetize those developer relationships we have with other services. And we're executing now, obviously, in influencer marketing. We're building up user acquisition in-house for the time being. Let's see what the long-term strategy on that is, and then we are reviewing other strategies, see how we can add more service offering to our more services to our service offering. And that is, of course, that we're moving into the big markets here by using our niche market for it. It's very, very large growth opportunity, and you can also work on the margin because these companies have different structure in the margin, it's higher margin. So you have Flexion is a lot of growth, low margin, and here it's less scalable businesses, but they are very high margin. So there is higher margin. So the combination will become very attractive. And so that's very, very much it. So thank you very much.
Thank you for that presentation. And now we'll jump into the Q&A section. The first question: which interest costs are referred to in the finance costs?
Yeah, I think this question was sent in before. So this is the finance. This is when you, according to IFRS, you have to do a net present value of your considerations, what you pay. So of the assets you have. No, all the considerations you pay for the price. So for the earnout, you do an NPV of it, and the difference between the two you add back as finance charge. It's complicated. Not even I got it fully right here.
Thank you for that answer. We'll take the next question. Could you elaborate on what the deal and agreements look like with the developers for game distribution rights, gross margin, timing of cash flows, etc.?
Yeah, so we always said that it's because we're working with very large underlying IP. You can't sign long-term contracts which are bulletproof because the underlying IP, even the game developer may lose the IP from a Disney or whatever. So the way we lock them in is by doing it for them. When we take over alternative distribution, they have nothing, they don't know it themselves. And if they had a team, they'd probably close it down. So that's the way we look at it. So the contracts they are maybe 1 year rolling, but it's relatively easy for both parties to come out. And we are also using that. If the games are not performing, like every game company in the world, some games are working really well, some are on average, and some are reason you can't explain are not really working for you. And then we also active terminating contracts. So that's how it is. It's a flexible position, but where you lock in the games you want through very strong performance.
And how much of the turnover comes from the Chinese game developers?
it's we can't report due to confidentiality agreements. We can't report exactly on that. But if you follow the games we signed, it is a large part. It's a significant part, I would say, of our revenues. There are other big developers in there also, but they are bigger and bigger. These guys are coming. They're very, very good at developing games. Maybe you can say in the beginning, 5 years, 10 years ago, they were copying. They're now almost driving the market. So it's been very good. And they're also coming from a market where they used to third-party distribution, the Chinese market, which we're not on. So they are going out looking at Google, Apple, and we take this other market. It's been working very well.
And which countries are included in the Asia segment, and which countries make up the largest part?
We haven't announced exactly how it is, but Asia is Asia, and in there one of the stores, of course, we are working with is one store in Korea, and the Korean market is it's very hard to break in, and some of the if you've seen on the press release, some of the Chinese developers are working there directly because it's close to their home market. But if you get the right games in, the KPIs on that market are exceptionally strong. So if you look at lifetime value on a user there, it's really, really good. So what we're seeing here is Asia, and one store is definitely part of this, where we managed to get games live on that market. It's still early days for us. There's so much more we can do there, but that's very interesting.
Thank you. Are you actively looking for new investments?
We are looking at new opportunities, and if we manage to do that in-house, take over a team, or if we do not a merger, but we do a cooperation with someone, or if we buy something, let's see. It's very much like with Audiensely and also Lightup. It's very much about personalities and see that it works. And some of them may not be sold, but we want to work very closely with them. So I have to find another one, or maybe we have the opportunity to buy, or you manage to find a team who want to quit because they don't like the other companies. So let's see where we end up. But we're definitely looking at increasing our service offer within marketing services for sure. So let's see.
And the next question. Where and how can we follow Flexion Mobile on what's happening next?
You should listen to my earnings calls. Now it is, as I said, it's about now executing here on this. You can see the slide on the blue side on marketing. So that's what we, from a senior management point of view, very much are looking at. And let's see where we end up.
Thank you. And do you have any closing remarks for this webcast?
No, we're still at very, very strong quarter where we'll start to see the effects of this low marginal cost especially on the distribution side, and let us continue with that for a while. And at the same time, you have places like Audiensely, like they're growing a lot as we're seeing here, and hopefully a very strong second half of the year. So yeah, it looks pretty good.
Okay, a big thanks to you, Niklas, for presenting today and answering our questions, and a big thanks to all of you who have followed today's webcast with Flexion Mobile. Hope you have a great rest of the day. Thank you, and goodbye, everyone.
Thanks a lot. Nice to see you. Thanks.